The National Energy Regulator's decision to approve a 12.7% rise in Eskom's electricity tariff has been met with mixed reactions. Energy expert Matthew Cruz shares his insights on this in terms of what the hike means for consumers and the South African economy.
NERSA has once again approved a price of electricity increase that is above inflation. In fact, it is more than 3 times above the current rate of inflation, as it has approved a 12.7% increase for this year. Eskom had applied for a 36.15% increase for this year, and NERSA has said that if they had to have granted the increases that Eskom was applying for, that it would have had a devastating impact on the economy. They've further given a 5.36% increase next year, and then in the following year a 6.19% increase. So this is less than Eskom had applied for, where they actually asked for 11.8% increase next year, so it's less than half, and also then that Eskom had applied for a 9% increase the following year. So in terms of what NERSA says is its reasoning for giving this increase that's less than what Eskom had asked, they said that Eskom could do better in terms of its efficiency, in terms of also then controlling its expenditure and having the amount of money that's used in order to produce electricity be less. They say they do not believe Eskom in terms of Eskom saying that it needs this amount of money for its revenue, and that it could be more efficient. They've also cited that Eskom's cost of coal projection put forward was high, and they don't think that that is reasonable in terms of what should be budgeted for coal. And they also pointed out that Eskom's revenue from electricity sales, they believe, can increase if Eskom is able to be efficient with increasing its energy availability factor and also decreasing its unplanned outages. It says if it has more electricity available, then electricity sales will be able to increase and will not have decreased sales due to load shedding. So in terms of this determination, it's interesting to see that there's still above inflation increases coming from NERSA's side. Eskom's not going to be happy, and just on Tuesday, Eskom had been mitigating 3 stages of load shedding with diesel-fired turbines, which is 10 times more expensive than using coal power stations. So this determination from NERSA will potentially impact the way that Eskom fires its diesel turbines to mitigate load shedding.